Welcome to Agoracom's Small Cap Breaking News.
Your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
We're diving into a fast-paced rundown of some key small cap developments that caught our eye.
Stories packed with the potential for those looking to dig deeper.
You've sent over the latest buzz, and let's just get right to it.
Absolutely.
Think of this as your quick hit on what's moving right now in the small cap world.
It's about identifying the signals within the noise.
Yeah.
The real news that could translate into opportunity or risk.
For sure.
Let's break down what these companies are reporting.
First up, BrandPilot AI Inc.
Tickers BPAI on the CSE and BPAI on the OTCQB.
The headline flashing across our screen.
BrandPilot AI Inc. unveils free Google Ads audit to combat costly overspending in search marketing.
This sounds like a direct shot at optimizing marketing budgets. The release highlights a partnership with search engine land.
Yeah, what's particularly compelling for investors here is the core claim around their AI-powered AdAi Audit. They're stating it can pinpoint wasted ad dollars in branded keyword campaigns, potentially freeing up 20% to 30% of advertising budgets.
Wow, that's a significant figure.
That's huge. And the tie-in with Search Engine Land,
Right.
a well-respected industry publication,
Yeah.
adds weight to their announcement. They're also hosting a webinar on April 17th, 2025,
Okay.
titled The Hidden Cost of Google Ads, Solving the Uncontested Paid Search Problem,
So really trying to get the word out.
which suggests they're serious about educating the market on this potential inefficiency.
So their technology targets what they call cannibalistic ad spend.
Right.
It's the idea that companies are paying for ads on their own brand names when they'd likely show up organically anyway.
Yeah.
It's like double dipping on your own traffic, right?
Precisely. If someone searches specifically for BrandPilot AI, their organic results should be at the top.
Yeah.
Paying for a Google ad in that same scenario, especially if no competitors are bidding on their brand name, can be an unnecessary expense.
Makes sense.
Their AdAi tool aims to identify these instances and allow companies to adjust their strategy, potentially leading to those substantial cost savings they're touting.
And a free audit is a good way to kind of get your foot in the door.
The fact they're offering a free audit is a smart move to demonstrate the value proposition upfront.
All right, next we're looking at Vertex Resource Group Ltd.
Trading as VTX on the TSX Venture Exchange.
The headline grabbing attention.
Vertex Resource Group Ltd. reports strong margins and cash flow despite revenue dip in 2024.
A revenue dip can be a red flag, but the rest of the story seems to suggest resilience.
That's right. While their 2024 revenue did see a decrease to $232.2 million, the underlying financial health appears robust.
Okay.
They're reporting an adjusted EBITDA of $35.9 million, which translates to a healthy 16% margin on their net revenue.
Pretty good.
Even more noteworthy is their free cash flow, which actually increased year over year to $21.2 million from $17.8 million in 2023.
So how did they manage to increase their free cash flow even with lower revenue?
It sounds counterintuitive, right? Their press release points to a strong focus on operational efficiency.
Okay.
Their profit margin improved to 26% of net revenue, up from 25%, indicating they're managing their costs effectively. They also made significant strides in reducing their debt with a $5.7 million decrease in loans and borrowings and a $11 million reduction in lease liabilities.
Wow.
Plus, they repurchased and canceled 3.2% of their outstanding shares,
Right.
which can be seen as a way of returning value to shareholders and signaling confidence in the company's future.
Interesting.
It suggests they're prioritizing financial discipline.
So it seems like the wind down of some major projects like their involvement in the TMX pipeline impacted revenue.
Right.
But they reacted by really focusing on their financial footing.
Exactly. And their fourth quarter results were particularly strong.
Okay.
They almost tripled their free cash flow in Q4 2024 compared to Q4 2023,
Wow.
hitting $12.1 million.
Nice.
This surge was fueled by both the higher profit margin and further reductions in their debt during that period.
Impressive.
Looking ahead, they are anticipating slightly lower revenue again in 2025 due to fewer large turnaround projects. But their confidence in maintaining current margin levels is a key indicator that this efficiency isn't just a temporary fix.
Makes sense. All right, moving now to the resource sector, we have Montage Gold Corp.
Trading under MAU on the TSX Venture Exchange and MAUTF on the OTCQX.
The headline here is Montage Gold Corp marks major construction milestone at Coney project.
For a gold developer, hitting construction milestones is crucial.
Huge.
Absolutely. They've commenced concrete pouring for essential processing infrastructure at their Coney project in Côte d'Ivoire.
Right.
What's particularly encouraging for investors is that this milestone was reached ahead of schedule just 3 months after the initial groundbreaking.
Okay.
This kind of early progress on an U.S. $835 million project aiming for gold production in the second quarter of 2027 is a strong signal of effective execution.
Ahead of schedule and on budget.
Yeah.
Those are words every investor in a mining project wants to hear.
Music to their ears.
And the projected gold production is substantial, isn't it?
Their 2024 feasibility study anticipates average annual gold production exceeding 300,000 ounces during the first 8 years of the mine's 16-year life.
Wow.
That positions the Kone project to be a significant gold producer in the West African region. Furthermore, their ongoing exploration efforts are noteworthy, with 81,000 meters of drilling completed in 2024.
That's a lot of drilling.
They anticipate releasing maiden resource estimates for new targets soon, which could indicate significant upside potential beyond the initial mine plan.
So they're still looking to expand.
Their stated goal is to discover at least 1 million ounces of additional measured and indicated gold resources and a grade 50% higher than the current deposit.
Wow, that would be a game changer.
Achieving that would be huge for the project's overall economics.
Beyond the numbers, they're also emphasizing their safety record and community engagement.
Right, which are increasingly important for mining companies.
For sure.
That's right. Achieving over 730,000 work hours without a lost time injury is a significant safety accomplishment.
Yeah, that's awesome.
Their commitment to employing Ivorian nationals and partnering with a local technical college for training also demonstrates a focus on long-term sustainability and positive community relations, which are vital for the ongoing success of any mining operation.
Absolutely. All right, finally, let's turn to Tilray Brands, Inc.
Trading as TLRY on both the TSX and NASDAQ.
The headline that caught our attention.
Tilray Wellness partners with Whole Foods to bring back highball energy drinks.
So this is a different kind of story, the revival of a familiar beverage brand.
Yes, this represents a strategic move by Tilray to expand its presence in the health-focused beverage market.
Okay.
Highball Energy, a zero-sugar, zero-calorie energy drink, was previously available at Whole Foods Market.
I remember that.
Tilray acquired the brand in 2024 and has reported impressive early traction with a 68% increase in Amazon sales over the last 6 months.
Wow, so they're seeing some good results already.
This strong online performance has paved the way for a national retail relaunch, starting with an exclusive partnership with Whole Foods.
The fact that Whole Foods is bringing it back suggests there's still strong consumer demand for the product.
Exactly. Highball has cultivated a reputation as a cleaner energy drink option, emphasizing organic caffeine, guarana, ginseng, and B vitamins while being free of sugar, calories, and preservatives.
Yeah, I remember liking those.
This aligns perfectly with Whole Foods' focus on health and wellness and taps into the growing consumer preference for functional beverages with natural ingredients.
So for Tilray, primarily known for its cannabis business, this is a clear diversification play into the broader wellness space.
Precisely, the energy drink market is substantial.
Huge.
And the segment focusing on healthier alternatives is experiencing significant growth.
For sure.
By relaunching Highball and leveraging their distribution capabilities, Tilray is positioning itself to capture a share of this expanding market. The existing brand recognition of Highball, coupled with its clean ingredient profile and the strong retail partnership with Whole Foods, could provide a significant advantage in a competitive landscape.
Yeah, for sure.
The key ingredients: 160 milligram organic caffeine, 50 milligram organic guarana, 50 milligram organic ginseng, and B vitamins are clearly highlighted, appealing to health-conscious consumers.
So as you've heard, we've covered a lot of ground from AI and advertising and resource management to gold development and the beverage market.
Yeah, quite a range.
What should our listeners be considering after this quick dive?
What's fascinating is the sheer variety of opportunities within the small cap market. BrandPilot AI is addressing a specific need in a massive industry with a potentially high-impact solution.
Right.
Vertex Resource Group is demonstrating financial strength and adaptability in a changing market.
Yeah.
Montage Gold is making significant progress on a project that could become a major gold producer.
For sure.
And Tilray is strategically expanding its wellness portfolio by reviving a recognized brand in a growing sector.
It's pretty amazing.
Each of these stories presents a unique investment thesis, but they all require further investigation.
Absolutely. These headlines and the points we've highlighted are really just starting points for your own research.
This raises a crucial question for you.
Oh, yeah.
Which of these narratives sparks your interest the most?
Good question.
which aligns with your investment strategy and risk tolerance.
Yeah.
Each company faces its own set of challenges and potential rewards, so a deeper analysis of their financials, management, and market position is essential.
Always do your own due diligence.
Yeah.
Okay, that brings us to the end of this rapid-fire deep dive into today's small cap breaking news.
A fascinating snapshot of the diverse dynamics at play in the small cap arena.
Follow Agoracom for more breaking small cap news and insights, and don't forget to tune into the full Agoracom podcast for even more in-depth discussions.
You can find us on Spotify at
https://open.spotify.com/show74MVPK WXFYY65A2XLM https://open.spotify.com/show74MVPK WXFYY65A2XLM.
Keep Exploring, Keep Learning.
Consider how these diverse small cap updates, from AI-driven efficiency in advertising and robust resource management to significant advancements in gold production and the strategic relaunch of a health-focused energy drink, illustrate the dynamic and often surprising potential within the small cap market, prompting you to consider where the next compelling growth story might unfold.